I have seen so many memes on this topic that it's not funny anymore, because a lot of beginner traders and even experienced traders, they draw so many trend lines and support and resistance lines on their chart that the chart looks like a barcode. I don't care if you trade crypto, stocks, options, futures, forex, whatever kind of trader you are, this video is going to help you, because in this video I will show you guys the easiest and the correct method to do technical analysis on the asset class you trade. First, let's start with a quick breakdown of what support and resistance levels are. Support is a level where the price has a tendency to find support and push towards the upside or maybe bounce towards the upside. And resistance is a level where the price has a tendency to find resistance and push towards the downside. A simple example that will help you imagine the situation is that you can consider the floor of your house as the support and the ceiling as the resistance. So if you throw a ball at the floor of your house, it will bounce towards the upside because the floor is acting as a support, and if you throw a ball at the ceiling of your house, the ball will come back down because the ceiling is acting as a resistance. So that means if the price is coming down, there's a tendency that the price will find support, that is the floor of the house again, and it will push towards the upside. And the same is true for the resistance, because if the price is going towards the upside, the price will hit the ceiling and it will push towards the downside. So this is the resistance and this is the support. Now the amazing thing about these levels is that these levels are interchangeable. That means if a price breaches a support, that support can now act as resistance, and if a price it breaches the resistance, that resistance can now act as a support. So these levels are interchangeable, and the market remembers these levels because, for example, if $100 level is acting as a resistance for a stock, and if the stock breaches that resistance and goes towards the upside, that same $100 level can now act as a support, and the price will find support at $100 level. That means these levels are interchangeable because the market remembers these levels. Now the best method to draw your trend lines and support and resistance lines is to follow the top-down approach. That means you have to first draw your levels and your trend lines on the higher time frames, like the weekly chart and the daily chart, then go to the hourly chart, then go to the 15 minutes, 5 minutes, 1 minute chart, and follow a top-down approach, because the higher the time frame, the stronger is the level. And if you guys ask me my favorite time frames, these are the weekly chart, then the daily chart, then the 1 hour chart, then the 5 minutes chart, and then my executions are based on the 1 minute chart, because I am a scalper, I am a day trader. If you are a swing trader, you might even stop at maybe the daily chart or maybe the hourly chart depending on your strategy, but you have to follow the top-down approach. I look at the weekly chart once a week, because there's no point looking at the weekly chart every day, because the weekly chart, the candle closes on a weekly basis. I look at the daily chart, hourly chart, 5 minutes and the 1 minute chart every single day, but that means I follow the top-down approach. I go from the weekly to the daily to the hourly to the 5 minutes and to the 1 minute chart. Now, as I explained earlier in the video, I don't care what kind of trader you are, because you're going to follow the same approach. That's why I'm going to take two examples. The first example will be of a stock. The second example will be of a crypto. I'm going to follow the same top-down approach and show you guys how I do my technical analysis. So make sure that you guys watch this video till the end, because this video can save you a ton of money when you are trading. And before we jump onto the charts and look at the real deal, I would really appreciate a thumbs up, because it helps out the channel a lot to grow and reach new traders out there. If you are new, subscribe to my channel and hit the bell notifications to learn more about day trading and to stay up to date with my trading journey as well. So let's take an example of a stock, and let's take an example of Tesla, because it's one of the most traded stocks in the world. So it's better to do technical analysis on a very common name in the trading universe. So let's take a look at the weekly chart of Tesla first. There's no point marking your levels at the bottom around $200-300 level, because at the moment the price is around $700 level. So we have to look at our levels between say 600 to 800, because that is how much maybe Tesla moves on a weekly basis. You have to do your technical analysis every single week. At least that's what I like to do myself. I like to remove all the trend lines, all the support and resistance lines, and then mark my levels every single week on the weekend, so that it can give me a fresh perspective on the market. On the weekly chart, I can clearly see that one major level that I can see is around $550 level, because we found resistance around this $550 level and then we push towards the upside. The next level I can see, which is a very strong level, is around $890 and $880 level. These levels are still a bit too far away from the current price because at the moment Tesla is holding around $720 level. The next level I can cleanly see is around this $780 and $790 level right here, because we got rejected from this level on this day, and this level was holding nicely recently as well. So this is a very important zone to keep an eye out when you're trading Tesla. Now on the weekly chart, you can also mark your all-time highs, but we are far away from the all-time high, so there's no point marking the all-time high at the moment just to mess around with your chart. But one level I like to mark, one trend line I like to mark, is this joining the trend line, these three lines, right? This on the weekly chart. We had a rejection from this trend line thrice. So if in future we decide to break this trend line or maybe reject this trend line, this is looking really good for a break towards the upside or maybe for a rejection towards the downside. So these are all the major levels I can see on the weekly chart that are acting as clear support and resistance. So here's the daily chart of Tesla, and we can clearly see that the weekly levels that we just marked, we are finding resistance and support around those zones and around those levels. So it gives us a very good starting point. We can even see the $780 level that we just marked. Tesla rejected off this level on the daily chart just a few days ago right here, and then we had a gap down the next day and then we pushed towards a downside. So that means the 780 to 790 zone is acting as a very strong resistance and support level on the daily chart as well. Now let's zoom out a bit further. The one daily level I can see is around this 690 and 680 region, because we bounced off $680 level on this day right here, which was the low of the day on 12th of May 2022. That same level was approximately the high of the day on 23rd of May 2022, right? So this $680 level is another strong level that we were not able to look at the weekly chart, but when we zoomed in on the daily chart, we can see that the $680 level is acting as a support and resistance on the daily chart, which is another level we need to keep an eye out when you are day trading. Now let's zoom out a bit further on the daily chart and see if we can mark any more levels. We can mark this level right here, $620 level. As I said, the stock market and the market, crypto market or whatever, they remember these price levels. We can cleanly see right here that we bounced off the $620 level earlier in 2021 as well. We can see 3 bounces of the $620 level right here, 620 bounce, and that same level after the next like 6-7 months, we found support at the same level. That's why it's very important to follow a top-down approach, because the market always remembers these levels. So now we have marked our levels looking at the weekly chart and the daily chart. So these are the critical levels I need to look at when I'm day trading. Let's also take a look at the hourly chart. As I mentioned, the higher the time frame, the stronger is the level. So when I look at the hourly chart, I kind of know that the hourly chart levels are not as strong as the daily chart and the weekly chart levels. But let's take a look at the hourly chart if we can see a trend or maybe a bear flag or maybe a bull flag on the hourly chart. As of this moment, we are kind of making a triangle on the hourly chart, not a very clean triangle, so nothing looking really good. I can't see any more clean levels on the hourly chart, but once you have marked your levels, you can look for trend lines on the hourly chart as well. Because for example, we marked this $680 level looking at the daily chart, but if we draw a trend line right here, we can see that on the hourly chart, Tesla was making a triangle that was not very clean on the daily chart. We broke out of this triangle towards the downside. We had a very nice push from 680 to a low of around 620 or $630 level in one single day. That's why once you mark your levels on the higher time frames, you have to look for your strategies, maybe bull flags, bull pennant, bear pennant on the hourly chart, the 5-minute chart and the 1-minute chart for your entries and exits and for your trading plan. For example, if I zoom in on the hourly chart right here, and if we take a look at the hourly chart from 18th of May, we had a nice push towards the downside. Just before the break of $680 level, we had a bear flag on the hourly chart. This bear flag was not very clean on the daily chart, but if you zoom in a bit further, you can look at the bear flag on the hourly chart. You can even look at the bear flag on the 15-minute chart. That's why mark your levels on the higher time frames, look at the strategy on the lower time frames. And for example, if you're getting a bear flag on the daily chart, that is even better than looking at the bear flag on the hourly chart or the 5-minute chart. Apart from these levels, you also have to mark the high of the day, the low of the day on an intraday basis. You also have to focus on the yesterday's high, yesterday's low, 2 days ago high and 2 days ago low right here, because these levels can act as very strong support and resistance when you are trading a stock intraday. So now let's take an example of crypto, and let's take an example example of Bitcoin because it only makes sense. I took an example of Tesla, which is one of the most traded stocks in the world, and Bitcoin is one of the most traded cryptos in the world. This is the weekly chart of Bitcoin. I can mark my support level right here because we bounced off this level in 2021, bounced again recently. So this level is a very strong support. If we break under this support, this level might act as a resistance moving forward, because as I said, a support can turn into resistance and a resistance can turn into support. But if we push towards the upside, this support is still intact. The next clean level on the weekly chart I can see is around this 48,000 zone on Bitcoin. It's always a zone the expensive the stock or the crypto is. If you're looking at a stock or a crypto that is worth around $2-3, you can look at the penny to the penny level. But the expensive the stock is, you have to look at the zone. For example, if you're looking at Tesla, that is worth around $800. When you're looking at that stock, you have to look at the zone that is plus minus 10, for example. So for example, if I'm watching $800 level, I'm going to keep an eye out on Tesla between 790 and 810. So it's plus minus 10. Now, for example, if I'm looking at a stock that is worth around $100, or maybe, for example, Apple that is worth around $150, I'm going to look at the zone plus minus 50 cents maybe. So I'm going to look at the zone from 149.5 to 150.5. After marking these two levels on the weekly chart, I can also mark the all-time high that is around 69,000 on Bitcoin. I can also mark this level, which was high of the day of this week, 4th of Jan week, and this level was also acting as support later in 2021. So this is a good level to watch as well. So let's now jump onto the daily chart of Bitcoin and mark our levels. On the daily chart, we can see that we are making a bear flag right here. We are kind of making a bear pennant or a bear flag, you can call it whatever, because we had a bearish move towards a downside. Then we have been consolidating in between this channel, right? So if we break towards the downside, this is looking good for downside as well. But if we break this channel towards the upside, this is also looking good for break towards the upside as well. Now, if I zoom in on the daily chart, I can also mark this level, which is around $32,500 level, because this level, this ray was acting as support and resistance earlier in 2021 and in 2022 as well. We can see a bounce of this level right here. We can even see a bounce of approximately this zone, again a zone, not a level, right here, and then we rejected this zone right here again. So this is a very strong zone we need to keep an eye out. That is approximately 32,500. And now this is the hourly chart of Bitcoin. I can't see any more levels on the hourly chart, but I can see a trend right here, because on the hourly chart we are kind of making lower highs. So what I mean is that this high on the hourly is lower than this high, and this high is lower than this high. That means it's kind of making a downtrend on the hourly chart. Similarly, towards the downside is kind of holding an uptrend, because if I mark a trend line towards the downside, we are holding this uptrend. So that means we are making higher lows towards the downside. That means this low is higher than this low and this low is higher than this low. That means the range of Bitcoin is getting tighter and tighter, and we might break out either side in the next few weeks or maybe in the next few days. As you guys can see in these two examples, I only marked like 5 to 7 lines. I see so many traders, experienced as well as beginner traders, they have like 50 or 100 lines on their charts. So that is not the correct way to trade. You have to maybe mark 5 or 10 critical levels around the current price the stock or maybe the crypto is trading around. Finally, I need a favor from you guys, because this video was actually suggested by one of the subscribers. So if you guys have any video suggestions, post a comment down below, because I'm thinking of starting a new playlist on this channel where I can create more videos for beginner traders and to cover the basics of trading. And also, before you go, make sure that you guys give this video a thumbs up, subscribe to my channel and hit the bell notifications, because I'm releasing 2 to 3 new videos on day trading every single week. If you guys don't follow me on Instagram, that is a must follow, first of all, because it's free and I post a lot of good day trading content on my Instagram as well. The link will be in the description box below. Thank you for watching, and I will see you guys in the next video.